in order to keep the system going, they can't let money supply decline. But they've let money supply decline, which tells me the plan is to tank the entire credit system. And that's how you will own nothing. The you'll be happy part, I don't know what they're going to put in the water or the air, but that's how you'll own nothing when credit collapses.
You're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it.
Imagine waking up to a world where the cash in your wallet is worth less than the paper it's printed on, where the savings you've worked so hard to accumulate could vanish in the blink of an eye. Now imagine there's a silver lining, quite literally. In this not-so-distant future, those who hold silver could find themselves sitting on a fortune, as the value of this precious metal skyrockets to heights most would scoff at today. $2,880 per ounce. Why? Because as the mighty US dollar teeters on the brink of collapse, silver emerges not just as a beacon of hope, but as the ultimate asset that could redefine wealth as we know it. Stay with us as we unravel how the impending fall of the dollar could catapult silver holders into unprecedented prosperity.
So when rates go down like that, what that means is the price is going up, obviously. So the value of treasuries will be going up. And the shorter you go, the less bang you'll get, but you will see rates going down at the shorter end too. So all treasuries across the curve will be appreciating. That will be, if you have those in your portfolio, they will probably be the only thing in your portfolio that's appreciating during the bust. You know, all stocks are going to be going down big. Metals will probably be, they'll have their run and then they'll probably be correcting pretty hard in the bust. So the one thing that I think will hold up, along with FDIC insured savings accounts, which I think they'll be, the FDIC will be given whatever funding it needs to satisfy the liabilities it has to cover. So if you have bank failures and your money is within the $250,000 FDIC threshold of insurance, you're protected. And I'm not worried about the FDIC not being able to meet their obligations. So that will be one asset that will hold values, FDIC insured accounts, and the other one will be treasury bonds. And beyond that, I don't think there are a lot of things that you can look to that are going to be doing well in the bust. The bust is going to hit across the board: commodities, obviously energy, stocks and corporate bonds. I think all will be hit.
In the world of global finance, the US dollar reigns supreme. It's more than just currency. It's a symbol of stability and economic might. The dollar's strength is undeniable, underpinned by the United States' vast economic power and political stability. It's the currency in which the world trusts, holding it in reserves, conducting international trade, and even pricing the black gold that powers our planet, oil. But what if I told you that this bedrock of global finance, the very cornerstone of international trade, faces potential threats that could shake its very foundation? Let's take a moment to understand why the dollar holds such a pivotal role. Post-World War II, the Bretton Woods Agreement etched the dollar's fate as the world's primary reserve currency, backed by the largest gold reserves at the time. Fast forward to today, and the dollar's dominance has only grown, with countries around the globe holding vast quantities of it to facilitate trade and hedge against their own currency risks. But as we stand on the shoulders of this financial giant, we must ask ourselves, is it infallible? History has shown us time and again that empires and their currencies can falter. While the thought of the dollar's collapse might seem far-fetched to some, it's a scenario that, if unfolded, would have profound implications not just for Americans but for the global economy. The question isn't just about if it could happen, but rather, what are the cracks in this seemingly impenetrable fortress that could lead to its downfall? Consider this: the very strength of the dollar, its ubiquity in global reserves and trade, also makes it vulnerable. It's a double-edged sword where on one hand, the demand for dollars keeps it strong, but on the other, it places immense pressure on the U.S. economy to maintain that trust and demand. Inflation, debt ceilings, trade imbalances, these aren't just buzzwords. They're real challenges that could, under certain circumstances, erode confidence in the dollar. And here's where it gets even more interesting. As we navigate through the intricate dance of economic policies and global market dynamics, the stage is set for a narrative where silver, often overshadowed by its flashier counterpart gold, could emerge as a hero in a post-dollar collapse era. But before we explore the rise of silver, let's take a closer look at the vulnerabilities of the dollar, the scenarios that could lead to its decline, and why this isn't just speculation but a conversation rooted in economic realities.
Typically use the word crash, but it is definitely, it'll fit that description because it's, I think, a peak to trough in the equity market, a peak to trough potential decline of 80%. We haven't had an 80% decline in the overall stock market since 1929 when it was down 90%. So that shows you how dramatic that is. And I think it comes because of an economic and financial bust, meaning an economy that's going to be in real trouble worldwide. This is global. And a financial crisis that I think will exceed the one in 2008-9, which means some big bank failures, more of those concentrated overseas. Europe's certainly a candidate, but so is Asia. So, Canada and Australia, their banks are more leveraged than ours now. We took our hit in 2008-9, and our banks got some religion forced on them to, recapitalize, make sure they have more capital or less leverage. So not that our banks aren't going to be suffering. I think there's less likelihood that we see our big banks go under. However, if it's as big a financial crisis as I think it's going to be, there's a lot of counterparty risk. So you can't rule out that, what's going to be hitting all the banking system is going to be hard enough to cause at least one or two over here, some, either close calls or having to be bailed out. So I think that's coming, the melt up first, because the tightening is over and people have to, run back into the market here, reposition. But probably by the second half of next year, we're in trouble because we are moving towards a recession. We're not in one right now, probably. But, we had a strong third quarter. Fourth quarter is not as strong, but it's still above water. I think as we move towards the middle of next year, we'll be in recession, and then that recession spills into something worse because of the leverage in the system. We have, as I like to say, we have 300 trillion, and it's now moved up to more like 320 trillion in global debt, debt across the globe. A lot of it's sovereign debt, but there's a lot of private debt. And then on top of that, we have quadrillions in notional value of derivatives, which is we're at levels in both debt and derivatives that we've never been at before. Even in 2008-9, we were high. We were at that time all-time highs, but this has gone another level above that. When you have that kind of leverage in the system, and then you have a hiccup or have a problem, it just exacerbates it. So that's why, very simply, we can have what I call a global bust, which we have not had a global bust in the post-World War II era. This is not just a recession. This is something.
As we gaze into the rearview mirror of history, the tales of currency collapses unfold like cautionary tales, stark reminders of the fragility of financial systems. From the hyperinflation in Weimar Germany to the recent economic turmoil in Venezuela, each story shares a common thread, a loss of faith in the currency as a store of value and medium of exchange. But what lessons can the almighty US dollar learn from these tales of economic despair? The root cause of these collapses often stems from a combination of fiscal mismanagement, excessive printing of money, and a stark loss of confidence among its users. Inflation spirals out of control, savings evaporate, and the very fabric of society is put to the test. It's a domino effect where the devaluation of currency leads to a catastrophic loss of purchasing power. Now you might wonder, how does this relate to the US dollar, a currency that seems invincible in its global stature? The answer lies not in the strength of the dollar today, but in understanding that even titans can fall if the cracks are left unaddressed. The US dollar, much like any currency, is not immune to the economic forces of inflation, debt, and confidence crisis. Consider this: the United States holds an immense amount of national debt, a ticking time bomb that, if not managed, could erode confidence in the dollar's stability. Add to this the Federal Reserve's balancing act of managing inflation while stimulating economic growth, and we find ourselves on a tightrope of economic policy, where one misstep could lead to a loss of global confidence in the dollar. But it's not just economic policies within the U.S. that pose a risk. It's the global reliance on the dollar. This reliance creates a paradox where the dollar's strength is also its Achilles heel. In a global economy where alternatives to the dollar are being explored and even embraced, the question isn't just about the U.S. managing its currency, but about the international community's faith in the dollar as the reserve currency of the world. As we delve deeper into this narrative, it's crucial to remember that the potential for a dollar collapse isn't just about economic indicators. It's about confidence. And in the world of currencies, confidence is king. The moment there's a shift, a hint of doubt, the repercussions can be swift and severe. This brings us to a pivotal point in our story. If confidence in the dollar wavers, where does that leave us? What becomes the safe haven in a world where the benchmark of economic stability is called into question? This is where silver, often seen as the understudy to gold, steps into the spotlight. But to fully appreciate silver's potential role in a post-dollar world, we must first understand the dynamics that could lead to such a scenario. Stay tuned as we explore the vulnerabilities of the US dollar and how silver is poised to emerge not just as a survivor, but as a beacon of stability in turbulent times.
And miners will be strong in the melt-up. The miners will be among the leaders, I believe, in terms of performance. It's been slow getting started. It's been a very frustrating group for a number of years, but they have bottomed and they have turned up, and they're starting to come out of some of their bottoms now in a little more aggressive fashion. I think I have said I think the metals and the miners will peak after the market. So if we get a peak in the market, let's say in March or April, you could carry the metals rally into the end of the second quarter, maybe even beyond that. My target for gold is 3,000, and that target is what I call a pre-bust target, because I am calling for a global bust to occur after this melt-up, a gold bust and a big bear market to occur after the equity melt-up. So I see gold going to 3,000 by, let's say, next summer or before. I see silver going to 60. That's been my target pre-bust. I actually have said of late, we might even see it get as high as 75. So, I have a range of 60 to 75 there. Those are huge moves, and moves we haven't seen in, those would be all-time highs for both of those metals if we got there. But we also haven't had anything close to those kind of rallies since we had a very short one after the March lows during 2020. March to August, they ran aggressively. Before that, it was 2016. We had something similar to this. So it's been a while, and a lot of the so-called gold bugs have kind of walked away from the metal and said, forget it. It's frustrated me too many times. So I think we have the conditions now. It's very much ripe for that kind of a move. People are very discouraged by the metals and the miners, and I think that's exactly how bottoms are formed. Like I said, I think the bottom is behind us, and we're starting to move out of that bottom.
In the labyrinth of global finance, every currency carries its Achilles heel, a fundamental flaw that, if exposed, could unravel its strength. For the US dollar, this vulnerability is not hidden in complex economic theories but lies in the very nature of modern fiat currencies. Value by decree, not by backing. Gone are the days when the dollar was tethered to the gold standard, a time when each note represented a physical claim on a tangible asset. Today, the dollar's value is derived from the full faith and credit of the U.S. government. But what happens when that faith starts to waver? The shift from a commodity-backed currency to a fiat system has granted central banks, including the Federal Reserve, immense power over monetary policy. This power, while useful in managing economic cycles, carries with it the temptation to print money in excess. History has shown us time and again that overprinting can lead to inflation, devaluing the currency and eroding savings. Moreover, the U.S.'s ballooning national debt presents a paradoxical threat to the dollar. On one hand, the debt underscores the global demand for dollars, as investors worldwide purchase U.S. treasuries. On the other, it raises the specter of what might happen if confidence in the U.S. ability to manage this debt wanes. The balance is delicate, and the line between maintaining economic stability and tipping into a debt crisis is finer than most realize. This brings us to the crux of our story. The vulnerabilities of the US dollar are not just academic musings, but real concerns that have the potential to shift the global financial paradigm. As we peel back the layers of economic policies and geopolitical dynamics, a picture emerges where the once unquestionable dominance of the dollar could be challenged. Enter silver, a metal with a storied past and a promising future. In times of currency devaluation and economic uncertainty, investors have historically turned to precious metals as stores of value. Silver, with its intrinsic value in industrial applications, stands out as a compelling alternative. Its price, though volatile, reflects not just investor sentiment, but also a response to real-world demand for its use in electronics, renewable energy, and medicine. But why silver? And why now? As we've seen, the dollar's dominance is not just based on economics, but on confidence. Should the factors we've discussed, debt levels, monetary policy missteps, or a loss of global confidence, converge, the flight to safety could see silver not just as a beneficiary, but as a protagonist in the new economic narrative. As we move forward, let's consider the potential paths that could lead to a revaluation of silver's role in the global economy. The journey from here is not just about watching the numbers on a chart. It's about understanding the underlying forces at play in the global financial system and recognizing the signs of change. The rise of silver in this context is not a simple matter of market speculation. It's a testament to its enduring value in a world searching for stability.
That's a great question. Yeah, the good news is that because rates are going to be coming down and their bond values are going to be going up, it won't be their balance sheet from the standpoint of their bond holdings. It'll be more their loan portfolios that'll be in trouble. There'll still be banks in trouble because they, got aggressive in lending to areas that are going to be hit. Junk bonds are going to be hit pretty hard. Corporates, if they have corporates on their balance sheet, they'll be hit. So it's the one area that everybody's worried about or has saw the punishment last March particularly, was the government guaranteed bonds, was the portfolio of treasuries that most banks have. Ironically, that's not where the problem is going to be when the bust hits. It's really their lending portfolios, and it's classic. You go back to 2008-9, go back to the early 2000s in recession, go back to 1974, early 1980s. Whenever a recession hits, and this will be a hard one, this will be a deep one, the banks take a hit because of their loan portfolios. And it includes mortgages. Housing is going to be a problem. So there'll be, particularly those that have bought houses in the last few years at these elevated prices. I think a lot of those are going to be, underwater, and if they lose their job, have trouble, maintaining their loan. So that's where you get into trouble, is when you have an economic cycle that turns south. The banks, obviously, their portfolios suffer. So the degree to which it happens, it all depends on the bank, and it depends, obviously, on the cycle. But because I think this is going to be a very hard landing, they're certainly going to have problems there. As I say, there'll be a lot of involuntary debt liquidation, I think, this cycle.
In the grand theater of global economics, scenarios that could lead to a significant loss of confidence in the US dollar, though unlikely, are not entirely outside the realm of possibility. These scenarios are not mere speculations, but are grounded in economic fundamentals and historical precedents. As we navigate through these potential triggers, we uncover the conditions under which silver could not just shine but skyrocket. Firstly, consider the specter of inflation. In an effort to stimulate the economy, central banks, including the Federal Reserve, have engaged in unprecedented levels of quantitative easing, essentially printing money. While necessary in the short term, these actions carry long-term inflationary risks. Should inflation rise faster than the Fed can control, we may see a scenario where the purchasing power of the dollar plummets, compelling investors to seek refuge in assets that have historically held their value, like silver. Secondly, the burgeoning national debt poses a systemic risk. As the U.S. debt to GDP ratio climbs to levels not seen since World War II, the question of sustainability comes to the fore. In a situation where the U.S. faces difficulties in servicing its debt, or if foreign creditors start losing faith in the U.S. fiscal discipline, a crisis of confidence could ensue. This could lead to a flight from dollar-denominated assets, with silver emerging as a safe haven. Another potential trigger could be the de-dollarization efforts by major economies. Countries like China and Russia have been actively looking to reduce their dependence on the U.S. dollar in international trade. Should a viable alternative to the dollar gain traction, it could significantly reduce global demand for the dollar, undermining its value and status as the world's reserve currency. Moreover, geopolitical tensions and economic sanctions could lead to a revaluation of the dollar's role in global finance. As nations seek to circumvent the U.S. financial system to avoid sanctions, the move towards alternative currencies or assets, including precious metals like silver, could accelerate. In this context, silver's appeal is multifaceted. Not only does it serve as a hedge against inflation and currency devaluation, but its industrial demand underpins its intrinsic value. In a world grappling with economic uncertainty in shifts in monetary regimes, silver's dual role as a financial asset and an industrial commodity positions it uniquely as a bridge between the old and the new economic orders. As we edge closer to understanding the full spectrum of silver's potential in a post-dollar collapse world, it becomes clear that the path to $2,880 per ounce is not just a wild prediction, but a possibility grounded in a confluence of economic dynamics and historical cycles. The transition from vulnerability to valor, from stability to speculation, sets the stage for what could be one of the most significant revaluations of wealth in modern history. Stay tuned as we explore the ripple effects of a dollar collapse on the global economy and how silver, this ancient store of value, could redefine wealth in the 21st century.
I talk about how they've not done well of late, but I'm really talking about silver because gold is not far off its all-time high. So yeah, gold is acting better than silver has over the last several years, but it's very close to it. It did break out, but it was a very momentary breakout and happened basically in the overnight markets and reversed itself immediately. So that caused people to think that was a top and gold was, giving you a final fake out to the upside and then reversing. I don't believe that at all. I think we had a breakout, but it wasn't ready to keep going. And now it's regrouped, and I think we are going to see new highs here very soon. And once it makes new highs, I think it's pretty clear sailing for the next several months. Silver obviously has a lot more overhead resistance to work through. It's nowhere near its highs of a few years ago. So that one is going to be, probably a little bit harder climb. But typically we find that when you're in a bull market for the metals, silver outperforms gold. So I think even though it's not going to run right to highs, it'll take many months, it is going to probably have better day-to-day outperformance.
In the aftermath of a hypothetical collapse of the U.S. dollar, the world would find itself navigating uncharted financial waters. This seismic shift would not only redefine the global economic order, but also challenge our understanding of value, wealth, and stability. At the heart of this new world lies silver, an asset poised to transcend its traditional role and become a cornerstone of financial security. The immediate effect of a dollar collapse would be the skyrocketing cost of imports to the United States, leading to inflation rates that could dwarf those of past financial crises. This inflation would not be contained within U.S. borders. Its ripples would be felt worldwide, as countries that have historically pegged their economic fortunes to the dollar scrambled to find stable ground. Governments worldwide would face a stark dilemma: continue to hold reserves in a devalued currency or seek alternatives that offer safety and stability. It is here that silver, with its intrinsic value and limited supply, emerges not just as an option, but as a beacon for nations and investors alike. For individual investors, particularly those with assets tied up in dollar-denominated accounts like 400 and Onyx, the search for a safe haven would become urgent. The devaluation of the dollar would erode the purchasing power of their savings, prompting a flight to assets that can hold their value. Silver, with its historical resilience in times of economic turmoil, would likely see an unprecedented influx of investment, both as a hedge against inflation and as a speculative asset betting on further gains. But the story doesn't end with just inflation and shifts in investment strategies. The collapse of the dollar would force a revaluation of global trade mechanisms. With the petrodollar system under threat, oil-producing nations might seek to denominate their transactions in alternative currencies or even precious metals, further elevating the status of silver in the international marketplace. The industrial demand for silver, already significant due to its applications in electronics, renewable energy, and medical devices, would only grow as economies transition to new technologies in an effort to stabilize and grow. This demand, coupled with its financial allure, would contribute to silver's ascent in value. In this scenario, the path to silver reaching $2,880 per ounce becomes not just plausible but probable. It represents not just a flight to safety, but a strategic realignment of asset classes in a world where traditional financial instruments have faltered. As we conclude this exploration, it's clear that the journey to $2,880 silver is more than just speculation. It's a narrative grounded in the vulnerabilities of the current economic system, the historical precedent of precious metals providing refuge during times of crisis, and the evolving role of silver in both the financial and industrial spheres. For those holding silver, the potential for unprecedented wealth is significant. But more importantly, silver's rise signifies a shift towards tangible assets in a digital age, a reminder of the enduring value of materials that the earth yields sparingly. As we remind our viewers, the landscape of global finance is ever-changing, and while the collapse of the dollar remains a speculative scenario, the lessons it teaches us about preparedness, diversification, and the search for intrinsic value in our investments are timeless. Remember, the future belongs to those who prepare for it today. So as we navigate these uncertain times, let's keep the conversation going. What do you think about silver's potential in a post-dollar world? Join the discussion below, and if you found value in our exploration today, don't forget to subscribe for more insightful analyses.
Definitely for me, I've had this melt-up forecast for a while. Now, I called the 2020-2021 market a melt-up. That was a separate melt-up. I mean, we don't usually get melt-ups. They're something that come all around, very rarely. So to have two in such a short period of time can confuse people. But I think it is because of where we are late in both the secular bull market and also late in the super cycle, which I define a super cycle as that period, that long cycle between two depressions, in this case, 1930s, and what I think will be a depression in 2030. So we're in the last decade of a super cycle. So when you get to that stage in big cycles, things get a lot more volatile and you can have these blow-off moves. So that's in essence what I think we're seeing. But yes, I've been talking about a melt-up long before last week's meeting. And I took a lot of grief in 2022 and early this year. And frankly, probably also this past fall when the market sold off. People thought it was a crazy call, and it is an extreme call. So I had a lot of people really questioning, that call and didn't believe it. It's only of late with this market moving back towards all-time highs that people are starting to jump on the bandwagon and say, hey, maybe you have something there. Maybe it is right. I don't think most people still believe that we can get to 6,000, never mind 7,000 on the S&P, but they are at least understanding that, this thing is now no longer a bear market. There's some legs to it.
In the intricate dance of global economics, the idea of silver reaching $2,880 per ounce is not merely a speculative flight of fancy, but a scenario rooted in a deep understanding of historical precedents, economic vulnerabilities, and the immutable laws of supply and demand. As we journey through the potential catalysts for a U.S. dollar collapse, from unchecked inflation and soaring national debt to geopolitical shifts, and the quest for alternative reserve currencies, the role of silver as a bastion of stability and wealth preservation has never been clearer. The transition from the realm of possibility to reality hinges on a confluence of global economic pressures that challenge the supremacy of fiat currencies, spotlighting the intrinsic value of precious metals. In this context, silver emerges not just as an investment, but as a symbol of a broader search for assets that can withstand the vicissitudes of economic policy and market sentiment. For those holding silver, the scenario we've outlined represents not just a windfall, but a vindication of the belief in silver's enduring value. For the broader economy, the implications are profound, signaling a shift towards tangible assets in an era marked by digital transactions and fiat currencies. As we stand on the precipice of potential economic upheaval, the message is clear: diversification, vigilance, and an appreciation for the historical cycles of wealth and power are key to navigating the future. Silver, in this scenario, is not just a commodity, but a linchpin in the strategy of those seeking to preserve and grow their wealth amidst uncertainty. In closing, we invite our viewers to reflect on the lessons of history, the realities of the present, and the possibilities of the future. The journey to $2,880 silver is emblematic of a broader quest for stability in a world where the only constant is change. We urge you to continue educating yourselves, to stay engaged with the unfolding narrative of our global economy, and to prepare for all eventualities. And remember, the insights we've shared today are not financial advice, but rather a lens through which to view the complex interplay of forces shaping our world. Thank you for joining us on this exploration. If you're keen to stay ahead of the curve in understanding the dynamics of precious metals, the global economy, and beyond, make sure to subscribe to our channel. Your support helps us bring more in-depth analyses and discussions to light. Before we part ways, let's not forget, the future is not written in stone, but in the actions we take today. Prepare, diversify, and engage with the world with an open mind and a critical eye. Until next time, keep asking questions, keep exploring possibilities, and above all, keep looking for the silver lining in every cloud.